So I suppose looking back, I suppose on the last 5 years or so, some of the major lessons we've learned down south are, number one, Napoleon was right about his generals. Luck is so important in timing. The bank levy and the foundation, the bank crisis, the extra funding, not saying it wouldn't have happened, but it would have been much harder to get the funding without them. Senior political and departmental support is essential, Minister. Stephen, banks are the only source of major funding when no public funds are available. Because at one stage, when we were saying, where do we go after the 25 million? We were told, you better go and find it yourselves. And we just went through, where can we get it? Philanthropists, major PLCs. And if you're looking for 70 million, there's only one place you can go, it's the banks. The cost to the banks for supporting the foundation is actually not material. When you look at the bottom line cost and giving us the lending at a discounted rate. But in fairness, there needs to be benefits for them also, and there are. And we'll talk a little bit about them later. And if you put all those factors together, you have the reasons why we have a foundation with 100 million of funding from the banking industry. And interestingly enough, even though there was an obligation placed on the banks who were bailed out by the government, all banks in the Republic of Ireland, all the retail banks, actually came forward with it because they saw it as the right thing to do.
So I suppose just to finish on this point, this graph kind of says something. The other thing, thinking about when you come to us, we've used graphs, we've talked about numbers, we like that kind of thing. It's a different proposition to the grants. Often people come to us and say, we want to work in partnership with you. And what we know is, we want a large grant check from you. And actually, we're really happy to give you a large grant check if you go away and do your grant-funded business. That's not partnership. That's just our job, and that's what we're there to do. We're there to serve. On this investing side, it is different. It is more like that partnership. Because we do want to have our arm around you, because then I know where you are. You're right here. We've got you. We're partners. In it together. Are we going down? Are we going up? We're partners. And this really is more of a partnership. So it's a very different kind of relationship between us than the grant relationship. So I think I'm going to stop on that. Thank you very much. It is a real pleasure to be here.
The one thing I'd say to you is I don't believe any project will ever be turned down because it's because it's actually a not-for-profit organisation. Actually, the opposite. I can honestly say I do have done and still do quite a fair bit of appraisal work, whether it be Green Book or otherwise. I think actually the key here is, and I think at times not-for-profit sector don't appreciate how well they're thought about. The key here is to actually involve people as non-executive directors. And I think you get shocked the amount of people who would be more than willing, and they themselves, all their organisations, with very high quality people on your board of a project. Not on your board, but on your board of a project. And certainly that project I told you about 10 years ago. If I told you who the 10 directors were, and you'd recognise quite a few of their names, you know, they were all starting off then. They've actually, some of them gone on to be one or two exceptionally successful business people. But I think the first thing they admitted is that little body they were, they loved it. That little project it was not for profit, but it was making a hell of a lot of money. They actually, what they did with that money was they were really motivated. They really missed a meeting. So I think that you can greatly enhance some of your projects if you separate your overall board from some of your projects. And whilst the project is under the control of your board, I think you should look at setting up advisory committees and advisory boards with multi-skills, not just private sector, but multi-skills. And the reason being, you heard about the 3 Ps: people, project, payback, in normal banking terms. If you address people, which means not only do you have people with expertise in the socio-economic sector, but you bring in multi-skilled people who complement that, that will also enhance your project, because the fact that they are so, what I would call, advocates of your project, that type of person will not let their name be associated with this they think it's going to be a success. And then you're in the convincing, whether it be a fund or whatever, that this is a very good project to back. And I think that there is goodwill out there, and I think that you'll be surprised. People are only, in my experience, I know very few senior people have been asked with a limited time frame, with a limited project, limited